our esteemed speaker, Mr. Maneesh Srivastava. Manish is an accomplished financial service leader, over 30 years of experience across retail banking, consumer lending, and wealth management. He has held CEO roles for more than a decade, leading institutions like Muscat Finance in Oman, Muthoot Finance Housing in India. Prior to that, he has worked in a senior level roles in HSBC retail banking. Currently, he is a co-founder and a CEO of Graves Technology Strategy, building Paydoh, a digital banking app targeted at Gen Z. The app blends traditional banking functionalities with a youth-centric value-added features to present an all-in-one money management solution to youngsters. We will hear more about it from Manish in his address. Manish has worked closely with Central Bank in India and Oman and represented organizations at key industry forums. He holds an MBA from FMS Delhi and an engineering degree from NIT Bhopal. His leadership style blends strategic clarity and operational execution, making him highly effective in complex multi-stakeholder environment. Manish thrives in dynamic setting and across diverse geographies. Let's give a warm welcome to Manish. And Manish, the stage is yours.
Right. Thank you, Deepika, for that rather flattering introduction. And again, a warm thanks for the JHS team for having me as the speaker. What I'm going to do is, over the next 30 to 40 minutes, talk about a generation which a lot of people kind of want to know better. It is all around them. It is a very big segment of our current society and of our current population, but is in very, many ways quite different from the generations that have preceded it. So I have a few slides that I want to talk through. So just allow me a moment to put that up, please. I hope the first slide is visible because it says Gen Z's relationship with money.
Yeah, we can see it.
Okay, so this is what we are going to be talking about today. Gen Z's relationship with money. And, maybe some people might be thinking as to why are we talking about Gen Z's relationship with money, and why are we not simply saying Gen Z and banking, or Gen Z's banking habits. And we will understand that in a little more detail as we go along in the presentation, because Gen Z's understanding of banking is not really the conventional understanding of banking that the previous generations have had. They view it very differently, and that is one of the aspects that we will cover in the presentation. Breaking the bank. Now, breaking the bank is not really in the literal sense of breaking the bank, but in the sense of saying that they are seeing the bank in a very different light, and they are essentially redefining money, trust, and financial institutions. Now, Gen Z is big. It is very visible. It is talked about a lot, and it is different in many ways. And quite a few people would probably say that it is actually a difficult generation to deal with. But difficulty lies in our inability to be able to understand the nuances of their behavior better. So this is really the Gen Z customer, and they are really turning the traditional banking model on its head as we see it. Who is Gen Z? Now, traditionally, the people who were born between 1997 and 2012, which essentially is the 13-year-old to the current 28-year-old, is what forms the Gen Z. Now, some characteristics that define them is that they are digital natives. Digital natives because India first had smartphones in 1996. That was when Nokia was first launched. This was the generation which was born a year after that. So their whole understanding of digital interfaces is kind of centered on the mobile phone. Even a laptop is a little too old school for them. They are values driven, which means that they value the traditional values. They are anxious, but they are financially ambitious. This needs to be understood maybe a little better. And as we go along, we will kind of talk about this a little more. But anxious because of the kind of times that they live in, but financially ambitious because of the kind of opportunities that they see around them. They live in the area of fast internet, ubiquitous Wi-Fi, so speed is something which they prioritize. They have grown up in the era of 10-minute doorstep delivery, so convenience is again a very important factor in their life. And they are surrounded by what they see on social media. Now, social media, as we all know, projects a certain picture which is or can be quite different from reality. So the thing that they value quite a lot is what is behind the picture, which is authenticity. So they look at people who have struggled, who have come up using the good old virtues of hard work, and they value authenticity. And this, in a certain sense, translates into their understanding and their adoption of services and brands that are presented to them. So this is really a generation, to quote a famous line from a Hindi blockbuster, they never stood in a line at a bank. They would probably be hard put to explain what a check is because they've never written a check in their life. And they probably think that a passbook is a concert entry ticket because they've never kind of gone and filled a passbook. They've never kind of seen that, most of them. Let's try and understand who they are a little more closely. This is India's population split by generations. Right in the center, in multicolor, is the Gen Z, the 1997 to 2012 borns. Prior generation was the millennials. The generation prior to that was the Gen X. And then the oldest generation here was basically the baby boomers, the silent generation. I presume a lot of audience here would probably fall in the category of millennials, and some would probably fall in the category of Gen Z, or Gen X, not Gen Z. And some of the audience which I see, which I can see, which is visible here, I can probably identify as Gen Z. But the thing to notice here is that as we see across these generations as they are defined, they currently form the largest cohort within the Indian population. Almost 38 crores out of a total population of 140 crores. I mean, just by themselves, they're bigger than the population of the entire United States. What is also interesting to see is that just following them is another 304 million of Gen Alpha, which is going to be stepping into their shoes and coming into their own over the next 10 to 15 years. So as a demographically young country, it is very important for us to understand what the behaviors are, what drives this generation, and why we need to kind of understand about them. Currently, 25% of the Gen Z are already in the workforce. It doesn't take too much to guess that over the next few years, more and more of them are going to be coming into the workforce, and that's going to define the workforce of tomorrow. That is also going to define the purchasing habits and the service consumption habits of this country as a whole. A projection of how India's population is going to look like over the next 30 years. What you see is the way it started out in 2020. In about 5 years' time, the biggest bulge in the population is going to be of the Gen Z category. So they form a really large consuming segment, and they will continue to be so till 2030 and beyond. And as we go into the next decade and couple of decades after that, from 2030, they will then continue to taper off, but they still continue to form a largest aging segment of the population, and therefore understanding their behaviors, again, to restate the point, becomes crucial. So why do I keep saying understanding their behavior is crucial, and why really do they matter? And this is some statistics which kind of puts this in perspective. This is a study carried out by BCG in October 2024. And what it says is that Gen Z influence directly and indirectly about 860 billion of consumer spending in India. That is roughly about 43% of the total consumer spending in the country. The blue section represents the spending that they do directly, but all of us either know Gen Z or have Gen Zs in the family. And we know that they don't directly spend, but they also influence a lot of spending within the family in terms of, the kind of car you want to buy, the kind of places where you're going to eat. So there is a direct spend and there is an influence spend. This number is going to go up to 730 billion out of a total of 1.4 trillion, 1.8 trillion out of a total of about 2 trillion. So, the figures kind of tell the story that not only are they a significant chunk of the consumer market at this point of time, they will continue to kind of exert a huge amount of influence on consumer spending and purchase behavior in this country over the next 10 years, at least, if not more. Now, one of the questions that can possibly come in your mind is that we're talking about consumer spending. We're talking about, how this money is going to be spent. But how does this kind of then translate into their relationship with money or banking? The fact of the matter is that banking by itself does not kind of serve any purpose. Banking is essentially about movement of money for a particular end or for a particular use. And this volume of money flowing through the banking system or through banking channels or conventional and unconventional is going to have a huge impact, and understanding the preferences of this generation is going to help design and modify the current systems to cater to their requirements. And that is what we are going to be talking about now that we have kind of got some idea or some sense of the kind of heft that the Gen Z has in the consumer market, not only now, but for the next decade as well. Let's now start kind of zooming in a little bit on Gen Z's relationship with money and the influence or their behavior or their thought patterns regarding money. So they form about 31% of India's population, roughly about 377 million. They are also a very big chunk of the global population. So India, as it is a very young country, and 20% of the global Gen Z kind of reside here. So these are people who are going to be influencing not only the consumption patterns here in India, but as they present a very large domestic market, they will also influence the behavior of those people who want to kind of address this market in India from overseas. About 48% of them maintain multiple bank accounts. 76%, an overwhelming 3/4, actually believe that virtual banking can replace traditional banking. And I would like to, at this point of time, just go back a little and talk about, the digital native part of their existence. 80% get financial literacy from social media. And this is very different from the way the people who have grown up, and some of whom are part of this presentation, would have thought about banking or would have acquired their knowledge of banking. So there is 377 billion already there, and about 4 billion are kind of crossing over into the major status every year, which is when they will compulsorily be required to have a formal banking relationship. So typically our understanding and our research has shown that within this particular segment, the need for handling money independently kind of starts the moment you enter high school. That is when you're about 13 years old. Traditionally, by current education systems, you are grade 8, and you started moving out of home for the first time is when you start handling money independently. And that need to handle money kind of grows as you go along and progress in your academic journey. And when you are 18, at that point of time, most of the people in India they would want to go and open a formal account because that is what is required. You get your PAN card and kind of, you move over to what we call adulthood. So it is a big segment. It continues to offer an opportunity, and there will be a sizable number of people who will be becoming major every year, and therefore present opportunities for digital disruption. Let's understand what currently is available and what the Gen Z is actually looking for. This slide is actually compiled from a number of different sources. What has gone into contributing this, putting this together is, the research that our team carries out into the behavior patterns of Gen Z on an ongoing basis. Our own proprietary research, which we carried out before we went into the development of the app that Deepika talked about at the beginning of this presentation. And when I say legacy banks, I think a lot of people might get influenced by the fact that you would probably think of 2 or 3 top private sector banks and think that some of this is not really what is kind of written here. So, not everybody kind of says submit forms and sign, but let's not kind of just the behavior of the top 1 or 2 banks kind of cloud our judgment. We're talking about a big country and a large segment. So what they are looking for now is not really to kind of fill forms, sign documents, but in a larger level or at a larger level, do things online, paperless. I mean, in our research, people said that if it should not take more than 5 to 7 minutes to open an account, if I have everything that is required for account opening. We talked about in the earlier slide of speed being the king. So boring and laggy interfaces are clearly a no-no. A clean, intuitive, fast interfaces is what people are looking at. Notifications which inform are passé. People are looking for notifications which are in real time, and they don't want to kind of move away from there. I mean, whatever notification is being sent, they want it to be actionable as well. They want their communication not to be through formal letters. I mean, a lot of them kind of access their emails, everything on the phone. So they enjoy personalized, emoji-friendly communication, and that should come as no surprise for any of us who has kind of been privy to the messaging that gets exchanged in this generation. A couple of things that came out quite strongly is that traditionally banking has been providing support in the nature of either walk into the branch or go to a call center. But we see that the behavior of this generation, because they have been largely digital natives, is you want to do everything on the phone and you don't want to speak unless it is absolutely essential. Even picking up that phone and calling the call center is something which one is loath to do. And they would want to kind of send out a message, get a response, and if that kind of gets things done, then so be it. They expect that when you are tech savvy, you will be predictive in understanding what their requirement is and not have them repeat things again and again for you to understand what it is. Again, going from the communication style, the branding is also something where they want it to be bold and fun, and they don't kind of welcome a staid corporate approach. In fact, a lot of them don't want to walk into a bank branch for the reason that it is very formal, very organized, very hierarchical. So where exactly is the banking disconnect here? So I talked about slow, opaque, hierarchical as they perceive the banking system to be currently, but they want this to be fast, friendly, customizable, and digital first. Their thinking is shaped a lot by the way they interact with services in the larger consumption domain. So what we are talking about here is that the generation prior and the generation prior to the prior generation had seen banking evolve in a certain manner, and therefore their expectation of digital service delivery is that what I used to do earlier by going to the bank should be made available to me digitally, and that for me kind of ticks the box on digital transformation. So earlier I used to go stand in a line and do my banking transaction. Now I can do it on the basis of internet banking, and to me that means a digital leap forward in terms of the convenience. But this generation thinks a little differently. For them, banking is just another service, and they benchmark this to the digital service that they otherwise consume in the wider consumer domain. So that could be they want to have the delivery expectation of an Amazon, they want to have timeframes of a Zepto, and that is kind of putting a lot of stress on the banking system in terms of living up to their expectations. So that's something which we see coming out a lot in the behavior or in the expectations that this particular set of this particular cohort kind of articulates. Again, trust is not just about having a brand name which has been around for a long time. Trust is derived on the basis of transparency. Give them the tough news upfront, but be transparent about it. Don't hide. Don't kind of go behind legalese to say that, well, I made you sign this, so it's somewhere hidden in the fine print. That's not something which is very appreciated. The user experience and how they make you feel. Quite a few of us would have heard this term called vibe. Does your brand give the right vibe? And again, influenced by the larger consumer space, what the peer reviews are like. I mean, just because you happen to be a big brand, just because you happen to be around for a long time, doesn't kind of automatically qualify for being their service provider, unless and until they see some kind of peer reviews. And I've recently kind of personally experienced this for an education loan that I was looking around for somebody in my family. And I went to the biggest service provider, but ultimately had to move to somebody who was a lot more nimble because the user reviews were not really very good, which my niece pointed out to me. So this is something which is happening. I mean, it's not just what is being said. It's actually people are actually seeing this and doing this. So to kind of summarize that part, if you can't get answers in app, or if you find your reviews online which are not good, then they won't trust you. Legacy does not count for everything. Speed and transparency is everything. So this brings me to what are the key trends in the banking habits of the Gen Z. First one that one can talk about very clearly is that they're app first and always on, 24/7 access, instant transfers, in-app customer support, and open to use of wallets and neobanks. So anything which, to use a slang, whatever floats my boat. So if money can be moved around using a means which is other than a traditional banking account, then so be it. It doesn't need to be a bank account. They look at values-based banking. So if you are eco-conscious and socially responsible, that will help this generation kind of gravitate towards you. And they tend to move away from brands that don't align. This is a trend which is seen already kind of manifesting itself in the consumer space. So ecologically conscious, sustainable brands kind of get more of their custom than those who are seen as kind of destroying the environment, not doing right by the society. It is probably a little less evident in banking per se, because everybody is kind of operating to the same standard. But what this does point out is that here is an opportunity for differentiation in case somebody wants to take it up. I talked a little bit about financial literacy from social media. That's real, that's happening. And Finfluencers, or financial influencers as we call them, are replacing financial advisors. So if you're looking at, targeting this set of customers through the conventional approach of relationship managers, fixing up meetings or kind of calls and kind of telling them about a product or a service, well, that's going to be a little difficult. So they get bits and pieces of information from the social media and they kind of put it all together. But they are hungry for authentic sources. While they do that, they realize that not all of it might be reliable. And therein lies an opportunity that if there is a reliable cultivation of people or financial influencers who offer genuine information, then a brand can really promote itself out there. A lot of learning happens from peers and not professionals. So the sense of community, or the sense of what should I say, for want of a better word, learning from the gang is very important. And sometimes their advice is even preferred over professionals who are experts in that field. There is a study which was carried out, I think it was by Bain and Company, which talked about the rise of micro investing. And this really says that about this generation is about 45% more likely to be invested in the stock market by the age of 21. And those of us who are of an earlier generation will realize that at 21, quite a few of us kind of did not know how to kind of get into the stock market. Some of us who are not Bombay guys will probably not know where the stock market, what was driving it. But they are very, very savvy about this. They understand or want to understand investing, and they want to take baby steps into investing in the market, hence the word micro investors. We're not talking about going in big time, but micro investing. There is a tendency to kind of go for side hustles, which means that we are talking about a very different consumer profile as compared to the generation earlier, where you have stable jobs, you kind of go in morning 9 to 5, you get a salary, you get a salary account, that salary gets credited to a certain account, and life goes on. Well, things are a little different with people kind of working one job in the morning, doing freelancer work in the evening, or kind of taking up side hustles to kind of earn that extra money. So that is something which is happening, and they are open to small ticket investing via apps, whether it is an ETFs, gold. Crypto is popular, even though there is question mark around that. It's not something which is a very vibrant stream here in India. And they want to manage multiple income streams. The fifth and the final point is BNPL over credit cards. While you know it, I'll still spell it out: buy now, pay later, option over credit cards. But this is something which has a couple of side elements to it. The first one being that the popularity of BNPL is largely because of this being an embedded finance feature in almost all popular e-commerce sites. I mean, if you buy even something for 500, they will tell you want to spread it out over 3 equal installments. And because of the seamless integration that most e-commerce sites have been able to do with BNPL service providers, this has kind of got a lot of preference as compared to credit cards, the penetration of which in this country is anyway at a very, very dismal 6.5% of the bankable population. So the other point that contributes towards that is that you do not, at the age of 18 or 19 or 20, have a credit history for any kind of sizable limit on a credit card, but somebody is willing to trust you with paying 2,000 rupees over 5 equal installments. I think you go for that. So that's another trend which has kind of caught on. They're comfortable deferred payments, but they look at credit cards still as an element of prestige because it signifies a certain standing, and also for the kind of offers that you can get only on credit cards and not on a BNPL offering. Implications for banks, really, what does this require the banks and the banking system to kind of do? I think the first one that it calls for is rethink product design from a compliance first to user first perspective. And something which I mean very simply by that is you get onto a digital app. If the first 5 screens of the app are only about giving consent A, consent B, or asking you to go through lengthy documentation, well, then you lose the plot. People are on there to kind of do a certain transaction. They are short on time. They want this to be completed quickly. So if you want to get consents, which you would be required to because we have to follow the regulation, space it out and take them at the time when it is needed. So those are the kind of small things that kind of make the user interface and the user experience better. But this is the kind of thinking that needs to go into the product design and think of user journeys. This also requires a lot of tinkering around with the existing API suite that might exist, redesign them so that you can combine 2 or 3 stages, count the number of taps that are needed to complete a journey rather than kind of just looking at it as a process on paper, and see how much of it can be simplified on an ongoing basis. The other one is treat banking like a lifestyle experience and not just a transaction, because that's how more and more people from the Gen Z are looking at it. That it's a it's something where I need to move money for the particular purpose, okay, and something which needs to kind of fuel my lifestyle and fuel my experiences. So if I'm going for a trip, how can I kind of have my banker or my service provider ease this experience, from having direct tie-ups, okay, kind of ensuring that I get the best deal possible and all of those kind of things. AI is something which is talked about a lot. It is being used for a lot of good purposes, but what the expectation and what the real advantage that it can bring to consumer journeys is for offering personalized insights. So this this generation wants to assert its individuality. It wants the world to perceive him or her for the kind of person that he or she is, and not kind of just treated as a category of persons. And that is a very prominent tendency. So personalized information, personalized insights, personalized recommendations will go a long way in ensuring loyalty. Again, we talked a little bit about influencers being kind of the people that the generation looks up to. So collaborate with the creators and influencers who can drive the right kind of behavior, because that would be not only help increase business, that will not only help get to more customers, but that will also ensure to provide the right kind of financial education. And financial literacy is at a premium, because the world is changing fast. There are various sources of information. Who is the reliable guy to look up to? But the channel is something which has to be in line with the one that is being consumed, or the vehicle of communication has to be the one which is kind of preferred. Summarize the slide. Well, the challenge isn't really digitization. It isn't about converting a physical process into a digital process. I mean, that's something which is considered par for the course. It is about being relevant. It is about relevance. And can you feel that your bank kind of belongs to a Gen Z's daily life? India, we still don't have a full-fledged digital banking license for any bank. And what you have is conventional or legacy banks kind of offering their apps, or offering or revamping their app and trying to kind of make the physical processes more digital, but which is good. But what is required is a complete reimagining of the entire user journey and designing those in line with their expectations. So that's what is preferred. Earlier, I talked about that a lot of them have multiple bank accounts. And there was some study that we had carried out about banking behavior in India, the UK and Brazil. UK and Brazil are two fairly digital forward economies. And what we got to know there is that India is multi-bank. So there is the account density as of this point of time in the bankable population is about 1.2. Brazil, the banking density is not that high. UK is even higher than that. But UK also has digital banking licenses for standalone digital banks. And the digital account penetration there among the bankable population, which is already multi-banked with legacy banks, is about 29% to 30%. As compared to that, if you combine all the digital banks that are operating here in India, that number is a very small 1.1%. So with a generation that is digital first, if you look at examples from other developed markets where it has gone to about 29-30%, there is tremendous headroom for somebody who's wanting to come in here and reinvent the space. And that, with all the factors we have talked about, are the things that we need to keep in mind. Deepika talked a little bit about what I do. And as we kind of bring the discussion to a close, I just wanted to kind of leave the audience with what Paydoh, which is our digital banking app, is all about. As you would have heard, it's the all-in-one money app for the Gen Z. I won't go into a detailed product plug here, but I will just kind of leave you with what we have been working on, and that has been in development for some time. We are in the process of seeking the final regulatory approvals as I speak now, and we're going to be hitting the market very soon. But what Paydoh offers is that we want to kind of redefine the digital banking landscape for this generation. So we offer a digital account in partnership with an RBI licensed bank, which to our mind combines the best of both worlds. You get the security and the peace of mind of an RBI licensed bank holding your core account. But the entire interface, the journeys are all designed by a fintech which has studied this particular space quite deeply and for quite a length of time. And in the initial user interviews that we have done, things have come out pretty well in terms of the way the user journeys are designed. The app offers complete digital onboarding in 7 minutes with a full KYC. Now, I would like to stress on the word full KYC because there are two types of KYC. One is a min KYC, where you can just do something in about 1.5 minutes. But then you have to go and complete a full KYC at some later point in time or walk into a branch. We have imagined our app to be something where there should not be any requirement to kind of step into a branch at all. So you do a full KYC. At the end of that full KYC, you not only have a digital account, you have a debit card, which is operational. You have a UPI ID and a UPI PIN, which means that you have a fully functioning banking relationship and you are not required to kind of re-authenticate it by visiting any branch or kind of do any further work on that. We talked about blending banking with lifestyle, and a couple of things which our research told us that this generation appreciates a lot is the ability to plan their financial expenditure. And therefore, we have an embedded budget book feature within the app, which works on auto track. You spend, it kind of tracks your expenses and populates them in the relevant category which you have budgeted for. And that is through a lot of back-end work that we have done in studying the various categories of spends, the various categories of merchants. Again, the generation likes to go out, shop, eat. There is a lot of things where, money is pooled to have a good experience as a group. And therefore, the app allows you, integrated within it, to split a bill which one person has paid for. And the good thing is that it allows you to not only split it, but it also allows you to settle within the app without needing to go outside, take another UPI app, key in the amount, and pay the person. It allows all of that, and it allows a dashboard which will allow you to keep a ledger of who's to pay and who has paid. We do offer the support of a call center, which is going to be provided by the bank, but the app contains an AI-powered do-it-yourself chat feature for in-app support, and it follows a predictive behavior. So you can type in your responses, and you can get whatever it is that you want to do. It will kind of talk to you the way you would get the response from maybe a friend who already knows about it or somebody who is sitting at the other end of a telephone. Micro investing in digital gold, something which we are going to be starting out with, expanding it to other categories of micro investing as well. But this is in tie-up with a state company, and this is going to be 99.99% pure gold. I already talked about this, but clearly the transaction engine of choice for this particular generation is UPI, and therefore the app kind of has the entire set of banking features, but an integrated UPI app along with that as well. So you have the choice of either paying through UPI or doing a bank transfer, all without moving out from one app to another app. So this is what is going to be out in the market in hopefully a few weeks' time, and we are very excited about it. And we look forward to the kind of responses that we get to our efforts over the past few months. Some closing thoughts. Gen Z isn't kind of rejecting banking or kind of saying no to banking. They are just reinterpreting it in line with what their value and belief system is, what their lifestyle is, and the way they feel that services should be delivered to them. And this is something which cannot be rejected. This is something which cannot be not recognized. And the sooner it's recognized, the better it will be for all the players in the system. They want control, clarity, and a cause. So they're looking at, being able to do things themselves, not talking to somebody. They say, I will get back to you. Say, if there is something I want to do, allow me to do it. Give me the tools. I will take care of it. They're very clear in terms of what they want. And they kind of they are socially aware, and they believe in a cause. Winning their trust really means not just putting a digital element out there, but winning their trust means speaking their language literally and visually. There is a very large visual element to their understanding. No prize for guessing why, because a lot of them derive their information, derive their understanding from elements that they see rather than what they read. They derive their from experiences they have had. So really, we don't know. Banking is evolving fast, but what the bank of the future will look like, if it looks like and sounds like Spotify, WhatsApp, or Netflix, then so be it. So banking is evolving. I think it's evolving, and it's evolving fast. We are all in for exciting times. All of us who are in the financial services business have seen the pace of change to be faster in the last 3 or 4 years than it being in the previous 20. And that pace is expected to continue with a lot of exciting developments on the horizon. And we are very excited as people who are bringing Paydoh to the market to be a part of this change and to be able to contribute to it meaningfully and positively to cater to what is probably the largest social change that is going to be happening in this country over the last 40, 50 years. That kind of brings me to the end of my presentation. I hope I have not exceeded the time brief that Deepika gave me. Thanks.
Thank you, Maneesh. This was really insightful. We have received few questions, so we will read out them for you so that you can answer them.
Sure.
Okay, so first question is, what's the deal with credit cards? Are they as scary as everyone says, or they actually are useful?
Okay.
Hello?
So Deepika, I have a request. Sorry,
Yeah.
I dropped out from here. So if you could also share with me the person who has asked the question. Is that possible, or just?
Yeah, sure. We can share that.
Okay.
Maybe Deen Mohammed is asking the question. What's the deal with credit cards? Are they as scary as everyone says, or they are actually be useful?
So Maneesh, Deen is from our accounting team in Mumbai,
Okay.
and he's about, I think, 22, 23 years of age.
Very good prospective customer. We're coming for you, Deen. Right. So, no, they're not scary at all. Of course not. They're not scary at all. There is no reason to understand at all that they're scary. I think what good credit card behavior and what a good credit card holder is expected to demonstrate is a certain amount of financial and fiscal discipline. So as long as you are kind of conscious of the timelines within which payments have to be made, and you don't let it go out of control, I think there is nothing wrong with it. In fact, it is probably a preferred means to pay, to avail of the offers if you are able to exercise a good amount of discipline with regard to your both payment dates as well as the amounts that you are paying. Clearly, the interest clock kind of runs at a very high rate there. And if you are sticking to the minimum amount payment on a every month basis, then it could lead to trouble 8-10 months down the line. But if you're kind of paying the bulk of the amount that you run the credit for, I think it's an excellent way to survive. Deepika, I can't hear you in case there's another question.
Okay, sorry, I was talking on mute. So next question is from Asher Tamboli. What's the one money thing I should definitely be doing at my age? So the questions which we are receiving are mainly from Gen Z, Maneesh. So
Okay.
they all are they can be your clients.
So I mean, you've said my age. I presume you are part of Gen Z. Okay. So I'll see. This is a question which can be answered after understanding a little bit about where you are in your financial journey. If you are somebody who just has an account, the one thing that you should be doing is you should be entering into some kind of a disciplined savings mode, which you should stick to over a long period of time. I am not going to be talking here about exercising fiscal discipline in terms of paying back on your loans on time, because that is expected. But one thing that kind of which is an advice which anybody would give to a younger generation is to kind of believe in the power of compounding and start doing some kind of committed, disciplined, sustained investing, even with a small amount over a period of time, and stick to it, because that kind of can end up building a significant corpus, and help you to beat inflation.
Okay. Next question. Okay, so chat. What's that like? Chat box.
Sorry, is there a question for me?
Yeah, yes. There are a few more questions we have received in the chat box. Okay. So first question is, how can Gen Z maintain a healthy balance between enjoying the present YOLO mindset and planning wisely for future? This is an interesting question. You live only once. Okay.
Yeah, so I think that's a conundrum that a lot of youngsters kind of face, and YOLO, as they call it in this particular generation. So this is obviously the thing that kind of presents itself, and my response here might be a little colored by my age, but you don't really have to kind of do those compromises. I mean, what one can do is kind of do a little bit of saving on a regular basis and reward yourself at the end of a particular period of time. Do goal-based saving. So, I mean, your expectation could be that, at the end of a year, I will take a trip to maybe Vietnam or Cambodia or wherever, or Mauritius or whatever. Plan for it in advance, and kind of commit from your daily or from your monthly earnings towards that particular goal. Don't try to kind of carve out that money at once when you are wanting to make that trip. I think a couple of things will happen. If you have a trip planned 12 months down the line, there is something which kind of then fires you to work towards that particular end. We all know human psychology. When there is a pot of gold at the end of a particular period, of particular stretch of effort, we end up giving a lot more than if it is not. Two, because you start planning for it, over a short period of time also, you can do a little bit of compounding of the amount that you have been kind of keeping aside for that. Thirdly, let your expectation of enjoyment and the kind of rewards that you want for yourself be proportionate to your earning capacity. So, gradually as your earning capacity increases, so will the nature of your trips, the places where you stay, the amount that you spend, the kind of food that you eat, and the kind of flights you take. So start with something small, reward yourself. Maybe it's a domestic trip. As your earning increases, kind of increase that, and if you combine that with the advice that I talked about a little earlier of keeping a certain amount of money aside, okay, well, you can kind of withdraw from that corpus as well and reward yourself every once in a while. So really, there does have to be a compromise between, living in the present and just kind of saving or kind of saving up for the future to say that, okay, one day I will go somewhere.
Okay. I think there are more questions. Okay. Go down. Okay, one question. Gen Z want a very fast financial growth. Is it a good mindset? They want a very fast financial growth. Is it a good mindset? That's a question from Vijaya.
I think there is one truism in life, which is that high rewards always come with high risk. Understand your risk appetite. I mean, if you feel that you are in a position to say goodbye to a certain amount of money in case it does not multiply in line with your expectations, then go for it. But you have to be mentally prepared that I might not see any of this if I kind of follow a particular pattern of investing or I choose a very high risk investment instrument. So high growth mindset, nothing wrong with trying to kind of achieve things quickly, but you have to rationalize that you may not see some of that money again if you're kind of going in for something very risky. And as long as you've made peace with that, well, I think the decision is yours there.
Okay. Thank you, Maneesh. We have few more questions. Which is this is very important question, Maneesh. Which is the preferred investment option for Gen Z?
Okay, so that's really a very difficult question to answer, but I say preferred investment option is something which is regular and which is disciplined. That rules out a few territories, that rules out a few categories, that rules out real estate, that rules out investing as an investor in an unlisted company. So a preferred option is something which is regular, which has a certain above market return or above inflation return, which is going to be there on an ongoing basis. Now, so that could be, and this is not intended to be, I'm not a SEBI registered investment advisor or anything like that. And therefore, the safer havens would be any kind of go for an ETF over a longer period of time. Gold is a good investment option, but it should be something where you are able to beat inflation on an ongoing basis. I mean, investing in a fixed deposit would not really be the best option. Kind of going for that would not be the best option.
Okay, we have received one more question. In your experience, how has social media impacted Gen Z's financial decisions, especially in terms of spending and saving?
So I think what this has done is that there are 3 or 4 things that we see at play. First one is, the Gen Z is hungry for advice. I think somebody asked the question, you only live once. So yeah. there is this tendency of enjoying the moment, not pushing everything towards the future. And that is partly fueled by social media, where you see everybody having fun. Some of it may be real, some of it may not be real, but it does drive the tendency to kind of have fun, go out, travel, eat, and generally have a good time. So that is then becoming a dominant belief among a lot of people. And when you do that, you need to kind of have something to drive that kind of a lifestyle. So the generation is becoming, there is a larger trend of moving towards consuming now. And if you see the macro indicators, that kind of tells you in terms of people kind of spending more for the present and the savings rate being kind of lesser as compared to the generations before. So that is in terms of consuming habits. Again, when you have that tendency at the back of your mind, you want to fuel that. And for then you realize that, well, you don't have enough money, okay, to be able to kind of afford the kind of things that you want to do. And therefore, then you start looking out again on social media for where is it that I can get this kind of money. Some people gravitate towards a luck or a chance based kind of a outcome, which could be various kinds of apps that are floating around. Some of them kind of want to then, and rightfully so, try to search for investment vehicles, which is going to make their money grow where they should invest. And then they start looking out for advice on the social media, because really for a 19-year-old or a 20-year-old, where exactly does that person turn to for advice? I mean, the parents are not in a position to advise you. You are not going to walk into your branch where you have a salary account and say, give me some investment advice. So this is most convenient. The device is always in your hand. So people are looking for advice on the social media. People are deriving their behaviors and what they should be going for on the social media. So in a certain sense, it is having an enormous influence on the way they consume, the way they are learning to save, and the way they are learning to invest.
Okay, so Chaitanya has raised his hand. Chaitanya, would you like to ask something? Or
So, Deepika, I just wanted to compliment Maneesh for the amazing session and the excellent research that he and his team have put through. And I would urge everybody that whoever needs a demo of the Paydoh app, please write into Deepika and the knowledge management team. And I'm sure Manish can organize a link for giving you all the demo of the Paydoh application in future. And with his permission, we would, if Manish agrees, we could put out a note on this session on our LinkedIn handles as well. It has been an amazing session, Manish. Really enjoyed it.
Thank you very much, Joseph. I just saw the comment that you posted on the chat, and I hope that my last slide kind of answered that. So
It did. It did. It did. Over to you, Deepika.
okay, so do we have a time to take another question, Manish, if you don't mind?
Yeah, sure.
Yeah.
I think we have.
My parents always tell me to save, but it feels impossible with the rent and the rest other expenses. Any actual tips for this one, please?
Yeah, so if there is any consolation, well, I feel the same way. Okay, so it is not easy to commit to a certain kind of savings, but committing to saving is a bit like committing to exercise, really. You take the baby step, and then you kind of, once you have wet your toe, you then kind of put your foot in and then kind of increase it gradually. So don't think of anything lofty to begin with. Don't think of anything which is going to make a dent in the way you want to spend your life, because yes, there is only one life. Yes, you have to live it. Yes, there are expenses. Yes, there are commitments. And one way to kind of look at it or approach this is that, what is it which is non-essential in my life that I can cut without actually it impacting the way I live? It nearly always is some kind of a discretionary spend. That, because the answer to that cannot be rent. The answer to that has to be some kind of discretionary spend. So make peace with the fact that you have cut that discretionary spend and channelize that into saving. And it's a very interesting question, and it's a very pertinent one, whoever has asked this, because we carried out this research. The primary research that we carried out was when we spoke to parents and children for about hour-long interviews to try and understand their attitude to saving. Now, while the overall saving rate in this country has been going down, no matter what happens, we are a country of savers. We cannot get away from it. It's in our blood. We have to save. behavior kind of ingrained over generations. So we were talking to a family in Coimbatore, and there was this interview which was going on, and the girl was about 15 or 16, and the parents were also there, and she was getting not a very generous sum of about 3,000 to 4,000 rupees as pocket money. And it was in that interview that she first revealed to her parents that whatever money she was getting, she was putting about 200 rupees every month somewhere in the back of her almirah. And she had kind of saved up somewhere in the region of about 3,000 to 4,000 rupees for 1 month of her pocket money or allowance. So this is something which a girl who is, and the parents were surprised because they didn't expect her to be kind of saving. They expected her to be blowing up all kind of money. So it's in our DNA. Just try and look at what discretionary expense can be done away with. And it will help if you have a mechanism of doing this through some kind of technology. Don't want to be kind of doing a plug again and again, but when we went about deciding this budgeting feature in our app, what this does is that it allows you to budget for various kinds of expenses. How much am I going to be spending on entertainment, grocery, travel, utilities, and stuff like that. One of the categories of expense was saving. And that kind of was questioning the basic logic of saying that is saving what is left over after you have made your expenses, or is saving something which you keep aside and spend the residual amount? So if you look at it from the second perspective that I spoke about, some kind of saving, no matter how small, should be possible.
Okay, so I think we don't have any questions.
Long answer to a short question.
So I would like to thank everyone for joining us for this insightful 30-second episode of JHS Excellencia Series on Gen Z's relationship with money. We are particularly grateful to our speaker, Maneesh Srivastava, for sharing his extensive experience with Gen Z's finances. His work with Paydoh is commendable. And his insight highlighted that Gen Zs are digital native who are both anxious and financially ambitious, representing a significant consumer segment. We learned about the gap between what traditional banking is offering and what Gen Z is looking for. And we also learned about the key banking trends, implication for banks, and the Paydoh's innovation approach. I would also like to thank our marketing partner, for board stewardship, for their support. And of course, a big thanks to all of you, all the attendees, for your active participation and engaging questions. Your interest with this is what makes this session a great success. And we hope that you found this session very insightful. And stay tuned for information about our next episode. So thank you. Thank you so much.